Hi students, 12th Standard Accountancy, Chapter 3, Exercise Sum number 4. From the following information, prepare capital account of partners Batmini and Batma when their capitals are fluctuating. So they have given here Batmini and Batma's information. From this information, we are going to prepare fluctuating capital method. So here before exercise sum number 1, 2, 3 and the exercise illustration sum number 1, 2, 3, we prepared fixed capital method. Okay. Under the fixed capital method, the two accounts are maintained for each partners, that is capital account and current account. So, okay, we prepared like this method. Now, under the fluctuating capital method, including capital with all other transactions between the partners and the firms are recorded in the capital account. Okay. So, listen, under the fluctuating capital method is very simple because we prepared under the fixed capital method capital account separately and current account separately. Now we are going to enter including capital with all other transaction, our capital and current account between the partners and the firms are recorded into the partners capital account. Okay, let's know the format of the fluctuating capital accounts. The format is very simple like ledger account. Okay, so this is the format. The heading is you have to write partners capital account, left hand side debtor, date, particulars, respective partners name we have to enter here. On the right hand side debtor, date, particulars and respective partners name we have to record it here. Okay, then the credit side transactions as per the format is the credit side transactions or initial capital account, that means opening capital account we have to write by balance drawdown. Okay, the capital introduced when they started business we have to write, that is called opening capital account, we have to write by balance drawdown. And additional capital introduced during the year by the partners you have to write by cash account or by bank account. You should write within the bracket additional capital introduced. Then interest on capital is to be recorded on credit side, and salary, partners salary and partners commission account. If the partners get profit you have to write it, enter it on or record it on credit side. So only 6 transactions you have to record it on the credit side, that is opening capital and additional capital, interest on capital. These 3 capitalism will be capital I transactions is to be recorded on credit side. Apart from that, salary, partners commission, partners profit is to be recorded. So these 6 transactions is to be recorded on credit side. Let's go for debit side. If the partners withdrawn capital, you have to write to cash account or to bank account and to drawings account. What is the difference between drawings and the capital, withdrawn capital? Listen, if the partners taken cash from the business for their personal use, you called it as the term is drawings. But the partners withdrawn capital, let's take partner A introduced capital 1 lakh rupees, then he withdrawn that whole amount 1 lakh rupees from the business. Okay, from the business he moved from the business, he left from the business only, he withdrawn that whole is capital. Okay, so withdrawn capital is different from the withdrawn cash. So withdrawn capital you have to use the term to cash account or to bank account, and cash withdrawing means to drawings account and interest on drawing. Listen here carefully. On debit side is very simple, you have to remember it in your mind. Withdrawn capital, withdrawn cash, that means drawings, interest on drawings. These 3 drawings is to be recorded on debit side. And if the partners get loss, you have to enter it on, record it on debit side. Partners capital withdrawn, cash withdrawn, interest on drawings, loss. These 4 items is to be recorded on debit side. And one more information, the partners capital account may show either credit balance or debit balance. Listen here, the partners capital accounts may show either credited or debit balance. It is fluctuating periodically. Okay, but according to the fixed capital accounts, the partners capital accounts will always recorded on credit side. So under the fixed capital account, partners capital account will always shows credit balance, right? Whether it is initial capital or additional capital, it will be shows on credit side only according to the fixed capital method. Okay, but on fluctuating capital method, the partner's capital account either will be credited or debit balance. Okay, do you understand? Now first we are going to mark the given information. Okay, capital on 1st January 2018, this is the opening capital. Okay, so opening capital means where it is to be entered on credit side. They have given here clearly credit balance. Okay, so on credit side, you go to credit side, you have to write to by balance brought down. Okay, so credit side. Then drawings will be appears on debit side, interest on drawings, debtor side. Partner's profit goes to credit side, interest on capital credit side, partner's salary credited, commission credit. Okay, we identified and marked the given information. Let's go to prepare the partner's capital account, that means fluctuating capital account. Okay, so you know the format very well. It's like a ledger account. The column is divided into two sides. Okay, on debtor side, left hand side debtor side, date particulars, respective partners name Batmini and Batma, and the right hand side credit, that means credit side, date particulars, respective partners name entered. The heading, you should write the heading, that is partners capital account. Okay, under under fluctuating capital account. So they have given here, we always first and foremost entry you should record it for opening capital, that is capital on 1st January 2018, it is to be credit balance. So you go to credit side, you have to write by balance brought down Batmini 5 lakhs and Batma 4 lakhs rupees. Then rest of the amount is transaction is by profit and loss appropriation 52,000 and 40,000 respectively. Interest on capital 30,000, 24,000. Salary, partner's salary for 45,000. And let's take salary. Partner's salary, Batmini has 45,000 and Batma there is no salary, nil balance. So you have to record it here by salary account. Batmini column you have to write 45,000 and Batma nil balance. According to the commission, partner's commission, Batmini there is no commission for Batmini and Batma has 21,000 rupees commission. Okay, so on credit side you have to write by commission account Batmini nil balance and Batma has 21,000 entered. Let's go to debit side. So as per the format we already marked in the question, as per the format you have to write to drawings account to interest on drawings account. Okay, then you have the higher value on credit side. If you get the higher value on credit side, you have to total it on credit side. Batmani total is 6,27,000 rupees and Batma's total is 4,85,000 rupees. If you get the total on credit side, then you will get the balancing figure, that means closing balance on debit side. So the differences is 5,55,000 for Batma's and 4,44,000 for 5,55,000 for Batmini, 4,44,000 for Batma. This is the closing balance. To balance carry down. Then like ledger account you have to brought it down to the opposite side below the total. You have to enter the difference value 5,55,000 and 4,44,000 respectively. Okay, against this you have to write by balance brought down. By balance brought down means this is the next accounting period's opening balance for Batmini is 5,55,000 and Batma is 4,44,000 opening balance. Okay, do you have any doubt? Please comment it on the comment box. Thank you. Take care.